Esta sessão vai ser gravada para que amanhã, quando receberem a nossa informação, possam também revisitar esta sessão que hoje vamos ter. Gostava de vos apresentar de uma forma sumária o programa FinTech Innovation da nova FCT Executive Education, alguns minutos sobre o programa, depois avançaremos para a Masterclass com o nosso orador convidado e teremos um período de tempo para perguntas e respostas. As perguntas vão ser colocadas, pedimos que sejam colocadas via chat na plataforma. Algumas perguntas nós vamos conseguir responder, entretanto, mas vamos deixar a maioria das perguntas para a sessão de perguntas e respostas, essencialmente, para que depois o nosso orador convidado possa respondê-las. O programa FinTech Innovation da nova FCT Executive Education tem essencialmente 4 grandes pontos diferenciadores. O primeiro ponto diferenciador está essencialmente relacionado com o conteúdo, ou seja, no contexto de FinTech e no contexto de inovação em FinTech, nós abordamos neste curso os vários subverticais do FinTech, constituindo 13 módulos e que culminam no desenvolvimento de um capstone ou num projeto de ideação e de uma solução de um projeto de negócio que é suportado e apoiado por uma equipa de mentores da faculdade e por experts na área dos serviços financeiros e na área da tecnologia. Depois tem uma estrutura, diria que pouco normal, se quisermos, ou não habitual. Todos os módulos têm uma estrutura conceptual ou fundamental, porque nós julgamos que é muito importante que os conceitos fiquem bem sólidos e sejam bem desconstruídos, se for o caso, para que haja não um conceito de utilização de buzzwords, mas uma verdadeira correção e conhecimento dos conceitos de cada um dos módulos que vamos abordar. Mas depois tem, logo de seguida, em cada um dos módulos, a apresentação de case studies que estão relacionados com o conteúdo de cada um dos módulos e que são apresentados pelos promotores desses case studies, por norma, pessoas C-level das várias organizações que estão connosco neste programa. Depois, relativamente aos participantes, quando falamos em FinTech, não estamos só a falar de pessoas da área de tecnologia e se calhar não estamos só a falar de pessoas que estão relacionadas com os serviços financeiros, falamos de todos aqueles que querem fazer uma mudança na sua carreira, que querem aprofundar os seus conhecimentos sobre os serviços financeiros com a tecnologia aplicada, ou são da tecnologia e querem conhecer melhor os serviços financeiros para poderem aportar mais valor, ou, como disse, querem fazer um career switch, se quisermos, para este lado. E mais do que isso, quando falamos em FinTech, falamos em pagamentos, falamos em WealthTech, falamos em gestão da riqueza, falamos em regulação, falamos em identidade digital, falamos de vários conceitos que são transversalmente aplicáveis a várias áreas de negócio, seja no retail, seja noutras áreas, como vão ter a oportunidade de ver. E o formato? O formato é um formato híbrido, salvo 3 módulos que serão full remote, que permite que, naturalmente, gostamos que todos os participantes estejam presentes em sala de aula, até porque vamos ter a oportunidade de poder ter sessões de networking, de conhecermos os outros e conhecer também as pessoas que representam os case studies, mas não deixa de ser híbrido e, portanto, tem aqui a flexibilidade para em algumas situações em que não possam estar presentes, ter a possibilidade de, através da plataforma Zoom, como hoje estamos a fazer, terem acesso online e live aos conteúdos, à sala de aula, se quisermos, e aos case studies. O primeiro programa e o primeiro módulo é um módulo que tem essencialmente aqui 2 vertentes. Uma de vos de vos habituar, se quisermos, ou de vos dar toda a informação necessária para conhecerem o programa, perceberem como é que podem maximizar o conhecimento, quais são as tecnologias que nós vamos utilizar para quem está dentro de sala e para quem está de forma remota, e como é que podem depois usufruir e fazer a continuação do vosso estudo após a sessão. E na segunda parte vamos, de alguma forma, alinhar o conhecimento sobre a cadeia de valor dos serviços financeiros. Conhecer quais são as componentes da cadeia de valor, perceber quais são os objetos de potencial disrupção, quais são os modelos de negócio que estão a ser colocados nas camadas em cima da cadeia de valor e como é que também, não só os novos entrantes como os incumbentes, estão a conseguir adaptar-se a esta nova realidade. E este é o primeiro módulo. Nos módulos seguintes, e no segundo módulo, e antes de vos dar indicação sobre os módulos, vão ver do vosso lado esquerdo, tem a indicação de 2 símbolos. Quando virem os 2 símbolos, significa que as aulas são híbridas. Naturalmente que gostamos de vos ter em sala. Quando virem apenas um símbolo, significa que a aula é full remote, ou a sessão é full remote, portanto, não vai ter sessão presencial. E, portanto, o segundo módulo vamos arrancar com pagamentos, com a parte conceptual e fundamental de pagamentos, que vai ser dada pelo Anis, que é professor na Nova, e vamos ter o case study da CIVS pela Teresa Mesquita. O módulo seguinte é o módulo de blockchain, cripto e central bank digital currencies, aquilo a que a Europa, por exemplo, está a referir quanto ao euro digital, ou que em outras geografias a implementação já ocorreu, nomeadamente geografias mais pequenas. Será também o Anis que dá esta aula, e vamos ter o case study da U-Trust pelo Rodrigo Russell. Depois arrancamos para os InsurTech. InsurTech temos o Gonçalo Graça Santos, que dará a estrutura conceptual, e teremos o case study da Lobbies pelo João Cardoso. Avançamos para uma aula full remote, ou seja, completamente à distância, WealthTech, o David Iori, que estará hoje connosco como convidado orador desta Masterclass, e vamos ter como case study o case study da eToro, que é a plataforma de social trading. É um case study também muito interessante, tão interessante como aqueles que viram até aqui. Na sexta sessão, vamos falar de Alternative Lending, e sou eu, Ricardo Ribeiro, que dou esta lecture, e teremos a Raise, apresentada pelo José Rego. Depois, sessão seguinte, UX and Digital Engagement, vamos ter o Vasco Antunes, e para apresentar o case study da Moie, vamos ter o Ricardo Madeira, que é da Caixa de Crédito Agrícola Mútuo. De seguida vamos ter Open Banking, também com o David Chiori, e vamos ter a sessão de case study da Digital Banking Services pelo Vasco Oliveira. Na sessão 9, porque são 13 sessões, vamos ter Alternative Banking Players, com o David Chiori também, será novamente uma sessão remota, e vamos ter o Carlos Brasial David, da Universo Sonai, a apresentar o study case da Universo Sonai. Na 10ª sessão, vamos falar sobre Regulation Technology e Compliance, e vamos ter o Ricardo Costa a apresentar o case study da Locker. Na sessão seguinte, vamos ter Social Responsibility e ESG, e teremos o Paulo Ferreira da Costa, que tem também muito para nos apresentar, e vai ser, seguramente, como todas as outras, uma aula fantástica. E vamos ter como case study a Marta Palmeira a apresentar o case study da Student Finance. Na sessão seguinte vamos ter Big Data e Machine Learning, com a professora da nova FCT, a Paula Amaral, e vamos ter o case study da Closer, apresentado pelo João Cruz. O último módulo, vamos ter Automation e Robot Process Automation, com o Bruno Valente Costa da Infosistema, e teremos o case study da Doc Digitizer a ser apresentado pelo Gonçalo Caeiro, que é Chief AI Officer da Doc Digitizer. E estes são os módulos, mas isto não fica por aqui. A partir do momento em que conseguimos ter um framework suficientemente sólido dos vários verticais, dos conceitos, da aplicação prática através dos case studies. Vamos ter a oportunidade a participar, a oportunidade de desenvolver um capstone, desenvolver uma ideia de negócio ou resolver um problema que temos nas nossas empresas que já gostaríamos de ter resolvido e que ainda não tivemos a oportunidade. Ou que já temos uma ideia de negócio há algum tempo e que gostaríamos de, em conjunto com outras pessoas, desenvolver essa ideia de negócio e ter ajuda no desenvolvimento dessa ideia de negócio, ou porque, durante os vários módulos e durante o programa, criámos uma ideia de negócio, fomos conversando sobre uma ideia de negócio e queremos pô-la à prova. E, portanto, durante o período Capstone, nós vamos fornecer um conjunto de materiais, um conjunto de frameworks para vos ajudar a desenvolver toda a estrutura de definição do problema, caracterização do problema, todo o processo de ideação, e vamos fazê-lo através também de sessões de mentoria que faremos com os diferentes grupos, para ajudar e para clarificar e, inclusivamente, trazer pessoas experientes ou experts em determinados verticais para vos ajudar no processo de criação da ideia de negócio, da solução e, no fim do dia, de um pitch deck que vão realizar e que vão apresentar perante um conjunto de pessoas representativas da indústria, representativas da área académica e representativas de venture capital ou VCs, que também têm uma experiência importante a aportar, das quais vos darão feedback sobre o vosso pitch deck, que vão nos deliciar seguramente. E por último, nesse momento, é o momento também em que entregamos os diplomas, e para todos aqueles que chegarem a este momento de apresentação do pitch deck, terão um diploma de FinTech Specialist na área ou nas áreas que dedicaram a sua business idea ou o seu business case. Esta é a jornada e, portanto, o programa começa no dia 11 de outubro, já muito perto. Como eu vos disse, são várias semanas, são 2 dias por semana, às terças e quintas-feiras, das 7 às 10 da noite. Fazemos um pequeno intervalo de meia hora para tomarmos uma refeição, quem está presencial, quem está em casa, e eu acho que também precisa de tomar uma pequena refeição. E até à 7ª semana. Depois fazemos uma pequena pausa nos módulos, o último módulo, o módulo da semana 7, que na prática termina a 29 de novembro. E depois temos aqui um período, para além de ser o período de festas, temos também um período onde vamos marcar e agendar convosco as sessões de mentoria e acompanhar-vos no processo do capstone e do vosso trabalho final e desenvolvimento do vosso business case, business idea e o respectivo capstone, que será apresentado no dia 12 de janeiro do ano que vem, numa sessão, como eu vos disse, onde estarão pessoas do setor, da indústria, pessoas da academia e pessoas de venture capital, que vos darão feedback, e é nesse momento também que faremos a nossa cerimónia de entrega dos diplomas e que espero que sejam todos eles diplomas de fortemente especialistas em várias áreas do FinTech ou Financial Technology. Esta é a equipa de coordenação, que está disponível para vos apoiar em tudo o que precisarem. Se precisarem de saber mais informação, nós vamos enviar-vos alguma informação amanhã, e se tiverem alguma questão que queiram colocar, podem ir colocando no chat, que o Gil faz o favor de ir respondendo. Entretanto, vamos arrancar com a nossa Masterclass. Queria só apresentar o David, ainda falarei em português, o David falará em inglês, eu já vou fazer o switch, mas o David é um dos top 50 Global Tough Leader e Influencer em FinTech, tem vindo ao longo da sua carreira a aconselhar bancos, banqueiros e profissionais da banca e da tecnologia aplicada aos serviços financeiros, foi e é coautor de vários livros relacionados com FinTech e dos vários verticais do FinTech, é o CEO de Banking Reports e tem vindo a ter participações ativas em várias associações ou em vários comitês que estão relacionados com Financial Technology, e é sobretudo uma pessoa fantástica que eu tenho o prazer de conhecer e de privar. E, David, welcome to this masterclass. The stage is yours. Please share I will stop my sharing, and please share your presentation, please. We are very excited to hear you.
Perfect. Very, very good. Thank you very much. And let me please, thank you for inviting me here. Let me please ask you a couple of quick questions. Can you hear me?
Yeah.
Perfect. Can you see me?
Yes.
Can you see the opening slide? Yes. Perfect. Very good. And so we are encouraging the people to ask questions because in the final 15 minutes, I will very happily answer your questions. Let's begin. So FinTech, how this concept is disrupting the financial services value chain. First, I will begin with the conclusion, but this will be a complex conclusion, so later I will have to derive it. The conclusion is this: there are two major forces, Moore's law and Metcalfe's law, turning ICT, information communications technology, into a general purpose technology. General purpose technologies are defined by disrupting all industries across the board, therefore necessarily among all industries, our industry, banking as well. Banking being disrupted by ICT, information communications technology, as a general purpose technology is FinTech itself. FinTech has 7 major areas with 40 technologies within these 7 major areas. Later, I will show you these 40 technologies. Now, these 40 new, creative, cutting-edge, emerging technologies are forcing banks to readjust their culture, their strategies, their tactics, as well as their operational excellence. This is how FinTech, this concept, is disrupting the financial services value chain. But let's look at the details. So on the left side, you see Gordon Moore, and next to him, you see Robert Metcalfe. In 1974, Gordon Moore, this gentleman, an IT engineer, one of the founders of Intel, has been interviewed by a magazine. And in this interview, he has said something very smart, which later became very famous. He said, I have a rule of thumb, an approximation. The cost of computing, storing data, moving data, actually goes down 50% per year in nominal US dollar terms. And actually, historians of science have examined it retrospectively, and it's exactly true from the first transistors to quantum computing. So the cost of digital, the cost of ICT, the cost of information communications technology, the cost of computing is exponentially going down. This is force number 1. We call it Moore's law. But there is something else. Metcalfe's law. He is Robert Metcalfe. He's a telecommunications engineer, and very interestingly, in the same year, he also gave an interview to a telecommunications magazine, and in this interview, he said that the value of telecommunications networks, is actually exponentially proportionate to the number of users. Think about this. Look at this little simulation. Two people can call each other or chat with each other through one route. If we double the number of people and we have 4 people in the system, they can transfer money, communicate with each other, transfer data among each other in 4 times 3 divided by 2, i.e. 6 ways. So we doubled the number of people. However, the value of the network has grown 6-fold. When we again double the number of users or people in the system, or people using Facebook Messenger, or people using Zoom, or people transferring money through TransferWise, then what happens? With 8 people, we have 8 times 7 divided by 2, 28 connections. We doubled the number of people, but the number of connections more than quadrupled. This is an exponential process. Now, if the cost of something is exponentially going down, however, at the same time, the value is growing exponentially, then after a certain cross point, there will be an exponentially growing delta of digital disruption. There will be stronger, and much stronger business cases to go through full digital transformation. And actually this is happening, and it's happening exponentially. Think about Citigroup. For Citigroup, this global banking giant, it took 200 years to gain 200 million clients. For PayPal, founded back in 1998 in Silicon Valley in Palo Alto by 5 very smart guys, among them one Elon Musk, another one is Reid Hoffman, who later founded LinkedIn and sold it to Microsoft for 26 billion US dollars, doesn't matter. So very smart guys. They started PayPal up in 1998. PayPal reached 200 million users in 20 years. In the year 2018. What happened with WeChat Pay? WeChat Pay reached the benchmark of 200 million active users in 2 years. Do you see that something is going on? 200 years, 20 years, 2 years. This is an exponential process of transformation. Anyway, the takeaway from this slide is that Moore's law and Metcalfe's law put together is turning ICT, information communications technology, digital transformation into a general purpose technology, rising and disrupting every industry in an exponential manner. General purpose technologies are very rare. Industry-specific technologies, industry-specific innovations are very common. For example, luckily, a new medicine, a new methodology to treat people is coming up daily or weekly, and that's good for us. Innovations in the automotive industry are coming up every day. However, general purpose technologies, which are changing, disrupting, transforming all industries across the board, are actually historically very rare. While ICT, information communications technology, is the general purpose technology of our age, let's take a brief historic overview of previous general purpose technologies. Writing, around 3500 BC. Do we write in all industries? Of course we do. Printing, around 1500 AD. Look at the humble 5,000-year gap between these two general purpose technologies, even though the two are logically intertwined, writing and printing. Steam engine, around 1790 AD. In the UK and in other places as well, there were actual social movements resisting steam engines, but resisting general purpose technologies is something that is doomed to fail, because general purpose technologies come back for your clients through the back door, through the window, if you don't learn them and adopt them. What happened to banking on the beautiful continent of Africa, 1.2 billion people? Well, in more than half of the 54 current sovereign countries on the continent of Africa, more people use mobile money than banking. You see, so basically banks have been reluctant to provide meaningful quality financial inclusion to the masses in certain countries on the continent of Africa. So the general purpose technology, in this case mobile money, came for their clients through the back door, through the window. And right now in many African countries, including Kenya, Tanzania, and many other ones, bankers are very much afraid of mobile money, and there is fierce competition between mobile network operators and banks in financial services. Electricity, 1890. Do we use electricity in all industries? Of course we do. And finally, ICT, information communications technology. I put the date of 1990, but computers existed much earlier. I just put 1990 because the protocol World Wide Web has been released by Sir Tim Berners-Lee in 1990. And I wanted to put this date because I was so lucky that I was the moderator of a large conference in Beijing, China, where Sir Tim Berners-Lee, the creator of the World Wide Web as a protocol, not the entire internet that's coming from DARPA, has been a keynote speaker. So I happen to know Sir Tim Berners-Lee, which I am very proud of. ICT disrupting our industry, banking, is FinTech itself. ICT disrupting payments is PayTech. ICT disrupting wealth management is WealthTech. That's why I will talk about WealthTech and other topics as well in this training program. ICT disrupting the regulatory environment is RegTech. ICT disrupting the supervisory environment is SupTech. ICT disrupting government is GovTech. ICT disrupting education is EduTech. ICT disrupting healthcare is HealthTech. And I can go on and on and on and on until tomorrow morning. Why can I go on? Because ICT is a general purpose technology. Now, as I told you, ICT as a general purpose technology disrupting our industry, banking, is FinTech itself. As I told you earlier, FinTech, financial technology, has 7 major areas: PayTech, ChannelTech, LendTech, CrediTech, DataTech, WealthTech, RegTech, and other not less important areas, other very important areas, for example, neobanks, for example, environmental, social, and governance technologies, for example, InsurTech, for example, core banking tech. New core banking systems are coming to the table. Of course, changing the core banking system of a major international giant, a large bank, is like changing engines mid-flight, is like fixing your motorbike while riding it. Anyway, it's still happening. Now, guess what? All these 40 areas, you see, the 7 major areas are structured into 40 sub-areas. We are in the galaxy of FinTech. So all these 40 sub-areas happen to be very, very beautiful and exciting, yet somewhat threatening from an incumbent, traditional, well-established, old channel mix, old strategy mix, old target group type of financial institution. Well, we can run through some of them in one sentence. For example, CBDCs, number 1, is central bank digital currencies. Very, very exciting area. Number 2, mobile wallets. Did you know that currently 52% of the global adult population uses minimum 1 mobile wallet? And it's rising. You know very well that WeChat Pay, Alipay, the Chinese mobile wallet giants have over 1 billion daily active users each. Meanwhile, Apple Pay, which is not a real mobile wallet, it's just the skeleton of a mobile wallet, has been conducting approximately equal volume of payments traffic in 2021 as MasterCard. Of course, it's strange statistics because many of the Apple Pay payments are MasterCard payments in the background. However, in its home market, in its most important market, Apple Pay is a real mobile wallet because in the US market, there is a second layer on top of Apple Pay called Apple Cash, which is peer-to-peer money sending and storage of liquidity in the mobile wallet, independent from bank accounts and issued debit and credit cards. Therefore, Apple Pay could become a real mobile wallet in other jurisdictions as well. Well, Visa and MasterCard are a little bit afraid of it. Let's jump to number 17, okay? We are traveling around across the galaxy of fintech. Number 17 is BNPL. What does BNPL stand for? Buy now, pay later. Buy now, pay later is actually financing online purchases, and it's a very strange form of financing. It has been born out from a regulatory mistake related to EMIs, e-money institutions, as per legislated in the PSD2 directive, the famous and unfamous PSD2 directive. By the way, PSD3 is coming up, and the first draft will be out approximately in June 2023. So keep your eyes open. Actually, I have specific expectations what is coming there. Anyway, this BNPL, this little regulatory nuance allowing e-money institutions to provide credit related to specific purchases with not more than a duration of 1 year, 12 months, this has grown into a multi-hundreds of billions of dollar business globally annually. Well, there are risks related to it, especially in a nominally rising interest rate environment. But the brave new world of BNPL, nevertheless, is very exciting. And many experts look at BNPL, buy now, pay later, as the new digital reincarnation of the credit card industry. Let's jump again. We are traveling across the galaxy. Let's go to number 22, artificial intelligence. Think about data, think about big data, think about very big data, think about 5G, 6G mobile communications protocol. Think about this very big data going through layers of artificial neurons, non-linear sigmoid mathematics functions in the forms of computer codes structured into layers. Think about more than 3 layers. Well, then we are at deep neural networks. Deep neural networks using the methodology of machine learning is not more and not less than deep learning. And deep learning is here. And deep learning is defeating humans miserably in narrow areas. We call it narrow artificial intelligence as opposed to artificial general intelligence. Artificial general intelligence currently doesn't exist, but narrow artificial intelligence, focusing on one area, is beating humans, and it's beating humans miserably. And there are more and more and more valid use cases within your bank, within your company, to apply artificial intelligence in a meaningful way. What happened to the current chess world champion? He exited a championship 2 days ago because he thought the other partner secretly is using an AI algorithm to get the right steps ahead, and that algorithm beats the current human world champion miserably. Anyway, we don't know if he is right or he's just accusing that other young player, but one thing we know, Go, the Southeast Asian strategic game, has been around for 4,000 years. Yet, the best genetic algorithm-based deep learning mechanism learned to play Go considerably better than the current human world champion in the course of 4 hours. Therefore, the current human world champion of Go, a gentleman from Southeast Asia, has permanently retired. He stopped playing Go because he says there is no reason. Anyway, let's jump again, but let's jump within this solar system inside the galaxy. Let's jump to blockchain. Think about blockchain. Think about the majestic story of blockchain originating from Bitcoin, a very problematic, probably non-compliant thing containing a technology, blockchain, distributed ledger technology, which is more than compliant. Blockchain actually has the capability to make your bank more robust, more safe, more compliant, more data conscious, more resistant to cybersecurity threats. And it's here and it's available. And actually, on my computer, I have a slide where I am listing more than 40 areas within financial services where blockchain will make a perfect case to be used. A couple of years ago, I did a training program for the largest mortgage lender in Canada about blockchain. They wanted a training program about how blockchain can be used in mortgage lending. And before I started to prepare for this training program, I thought it will not be good. It will not be very useful in mortgage lending. And as I did my research, as I created the slides, as I thought through the value chain, as I discovered certain things, it became so obvious that blockchain is crying for mortgages and mortgages are crying for blockchain. It's a match made in heaven. And from the building permit of new buildings to the secondary market of securitized mortgages, this is a value chain of more than 100 steps. There is a perfect reason to get everyone on a blockchain. But now I only listed one of the 40 areas. Now we will take a random trip into 2 or 3 of these areas through slides. Number 1, CBDCs. Central bank digital currencies. Central bank digital currencies will soon, within 5 years, basically take over decentralized digital currencies as they are now, including cryptocurrencies. CBDCs, central bank digital currencies, are, apologies, we are going there. Okay, we are not really jumping in the galaxy. We are focusing on central bank digital currencies now. So central bank digital currencies are basically digital forms of cash, and they are induced, they are motivated, they are propelled by 2 major forces. One force is the horizontal force. The horizontal force is the fact that cash, i.e. banknotes and coins, look at category 1, are direct liabilities of the central bank. We also call it narrow money. We call it M0. We call it monetary base. We call it monetary supply. These are quasi-synonyms, not exact synonyms in monetary theory, but quasi-synonyms. Now, all these categories must be controlled by central banks. But when cash, i.e. coins and banknotes are de facto going out of circulation. Look at Sweden, look at the Netherlands, look at the UK, look at China, where the first banknote has been emitted by the Tang dynasty in 745, not 1745, 745. But in the past 10 years, cash de facto went out of circulation in China, the great grand home of cash as king. Now, if cash de facto goes out of circulation, central banks lose the direct control over M0, the monetary base, because it's not circulating. And modern central banks will not take this defeat. They will want to maintain control over narrow money in the age of digital money as well. Therefore, they will have to produce central bank digital currencies, i.e. CBDCs. This is why the Central Bank of China, this is why the Riksbank in Sweden, this is why the Fed in the USA, this is why the Bank of Japan in Japan, this is why the Bank of England in England, this is why the Swiss National Bank in Switzerland, and this is why many other major central banks are working on these projects. Now, there are many sub-versions of CBDCs. The version which will prevail, this is a bold guess, I'm just running ahead a little bit, will be the version of central banks opening up mobile wallets, central bank-owned mobile wallets for the population, and people can actually exchange their cash to central bank digital currencies deposited in the central bank-run mobile wallets. But there is a vertical justification for central bank digital currencies as well, and that comes when we compare category 6 CBDCs with category 4 cryptocurrencies and decentralized digital currencies. Actually, cryptocurrencies and decentralized digital currencies are private forms of CBDCs. CBDCs are sovereign controlled forms of cryptocurrencies and decentralized digital currencies. And actually, in the history of humans and money, in monetary history, in other words, sovereigns always prevailed. Now, we are jumping to some other categories, specifically category 8 and 9, AR and VR, augmented reality and virtual reality. Now, cinema, large screen, TV, smaller desktop, smaller laptop, smaller tablet, smaller smartphone, smaller smartwatch, too small. What is the next step? The screen has to disappear. The screen can disappear in two major ways. One way is that the screen substitutes physical reality, that is VR. The other is that the screen augments physical reality, that is AR, augmented reality. Look at augmented reality. One of the key tools of augmented reality will be smart contact lenses. Google and Samsung in the background are already working on smart contact lenses. Meanwhile, banks are developing sort of hybrid solutions to use the smartphone, at least temporarily, to produce some AR type of experiences. For example, Commonwealth Bank in Australia has an augmented reality mortgage application. You are walking around a major city in Australia, you are pointing to a piece of residential real estate, your phone's camera, and it triggers the approximate price of the real estate by price, and it gives you a hypothetical mortgage calculation. Another bank came up with something very neat. You show your debit or credit card to the camera of your phone, and it triggers your balance and your past 3 transactions automatically. It's very neat. Even one of the banks I'm advising implemented it. I'm also very proud because I advised UniCredit Leasing to implement augmented reality car leasing application. You are walking on the street, you see a car which you think you may want, you show it to the application, it calculates a new new and a used buy price, and also a credit or leasing. Meanwhile, in virtual reality, which is substituting digital reality, there are many applications actually from KBC, the leading Belgian bank, running virtual reality branches. It's amazingly done. Actually, it's even gamified, to Alibaba through Ant Financial, owning Alipay, doing VR payments. Did you know that Alibaba has a three-dimensional version, every VR version, every street is a product category, every building is a brand, you can navigate yourself inside buildings, you can stare at a product for more than 1.5 seconds and blink, that brings the information up, including the price, and then you can stare on the price for more than 1.5 seconds and blink, and that triggers VR pay. Okay, now we have discussed that the screen is actually disappearing in two ways. By the way, augmented reality. Apple within weeks is coming out with the smart glasses, which is another line of hardware devices related to augmented reality. So we think that the screen can disappear in two ways, as we discussed, substituting physical reality or augmenting it, virtual reality or AR. But there is a man, there is a guy who always goes one step further. His name is Elon Musk. What does Elon Musk say? Hey, David, wait a minute. It's not gonna be AR or VR. The screen is going to be inside our body. How? Through brain-computer interfaces. This is one of the reasons, not all the reasons, but one of the reasons why Elon Musk is running Neuralink, the experimental company wanting to implant microchips into the human brain. Now we are talking about brain-computer interfaces, cyborgs, the combination of machines and humans, transhumanism, downloadable brain. But let's just go back to reality. All these 40 technologies, and now we just touched 3 and we just scratched the surface. All these 40 technologies are minimum this beautiful and exciting and controversial and inspiring and creative and innovative. And all these 40 together are pushing banks to rethink, readjust their culture, their strategies, their tactics, as well as their operative reality. Now, let's again wrap it all up. By the way, meanwhile, you can follow me, you can find me in social media, and I will see you at the Nova FCT FinTech Innovation Program. But let me please wrap it all up. So Metcalfe's Law and Moore's Law, these two major exponential forces, are making ICT, information communications technology, a general purpose technology, disrupting all industries around us, therefore necessarily our industry as well, banking being disrupted by ICT as a general purpose technology is FinTech itself. FinTech has 7 main categories with 40 specific areas of exponentially emerging technologies, and this complexity and this entirety of 40 emerging exponential innovative cutting-edge technologies is pushing banks, motivating banks, so to speak, forcing banks to change their strategies, tactics, operative actions, as well as rethink their culture and relationship towards digital excellence and innovation. Thank you very much for your kind attention, and I am ready for all the questions.
Thank you, David. It was indeed marvelous, as as I was expecting, the way that you are mounting the Galaxy in a way of and comparing with the general purpose technology, and how this relates with financial technology, because in the end of the day, we are talking about transactions, and transactions are value, and value are knowledge on that case. And after the moment that we understand that everything moves around transactions, and technology is the layer which turns available all this movement of value, like change of value, whether it's centralized or decentralized, whether it's sovereign or non-sovereign. Indeed, it's great. Okay, I have some questions here, and the first question is, what are your expectations about PSD3? Do you think that PSD3 will normalize and create more standards, will go beyond the open banking that we have today, or goes beyond the, or can we expect to have open finance?
Yes, it's a very, very good question. And before answering, I want to call your attention to something important. One of the reasons why I like the way you design this Novo FCT FinTech program is that when we look at the modules, when we look at the logic, in fact, we are covering all of the 40 areas of this beautiful galaxy. So I only scratched 3, and I only scratched. Imagine covering this galaxy. This is what I see in this program, and this is why I want to participate in this journey, because it's very, very exciting and colorful, and it very well covers this galaxy. Going to PSD3, I think it is going to come up with European Economic Area-wide API standards. This is something very controversial because traditional banks are conditioned to lobby against these API standards because they see that in the United Kingdom, for example, where API standards are up and alive since the 1st of January 2018, there are currently almost 300 active registered third parties under open banking. Imagine if the European Economic Area, from Portugal to Hungary, from Denmark to Italy, comes up with one API standard. All of the sudden, third parties, and through third parties, clients can connect to 7,000 banks across the European Economic Area through one API standard. It would be something very controversial and very important. My bet, but I am uncertain, but it's like a 60-40 bet, is that API standards will be part of PSD3. Also, the entire relationship between credit institutions, specifically licensed banks, versus e-money institutions, versus payments institutions, specifically AISPs and PISPs, account information services providers, and payments initiation services providers, will be readjusted and clarified. Also, PSD3 will hopefully and probably not only renew, repeal, and replace PSD2, but it will also renew, repeal, and replace the EMI Directive 2. These two things should be regulated in one corpus, one body of regulation. It makes perfect sense. Also, I am expecting very exciting clarifications and additional rules coming up about safeguarding. What is this safeguarding? Safeguarding is the fact that as opposed to licensed banks, which are lending out the client deposits, or at least investing them through their treasury, e-money institutions have to keep all the client money on a so-called safeguarding account at all points in time. Now, what regulators saw in the past years is that these safeguarding accounts are a little bit intransparent. There is some ambiguity around them. It's a very sensitive area of the concept of e-money, and probably better regulations will come up in this sense. Now, there is a counterforce. These are all positive things, but there is a counterforce, and that is cybersecurity. The architecture, the philosophic structure of open banking is amazing, beautiful, sweet, and charming for the clients. However, I will be a little bit informal as well as exaggerating. It's a nightmare from cybersecurity point of view, at least theoretically. Now, what I also expect is some cybersecurity issues to arise in the coming months, years. Unfortunately, these threats are growing. And that is going to be a counterforce, because producing third parties with lower guards in terms of cyber defense and security than licensed banks, having access to the money of millions of clients through different banks, this is a little bit problematic. Anyway, I can go into more and more and more details. These are some of my major expectations.
Thank you, David. This was a question from Brun Costa, which is one of our partners and one of our invited professors too on the automation and RPA. Okay, I have another question. Probably you are a bit tired. You are in Abu Dhabi for a huge journey on lecturing and training there. But I will not be too much hard with you. But I have two more questions. Let's go to the other one. The question is the following. One of the participants has the view that this card economy, meaning credit cards, debit cards, plastic, non-plastic, is probably dying in a way that if you look to the European Payments Council, for example, you have almost ready the trails for account-to-account transfer of payments and request to pay. What is your view? The view is that it's a question of time, and that people, or are we waiting for CBDCs to happen?
Right. Now, I think the card industry, plastic cards, are being disrupted, and they are being disrupted in front of our eyes. And as Clayton Christensen, the late professor of Harvard Business School, #1 authority of disruptive innovation, described, they are being disrupted by the story, by the analogy of boiling a frog. I am sure everyone knows that if you put a frog into boiling water, it immediately jumps out, luckily. However, if you put the frog into lukewarm water and incrementally, step by step, in 15 minutes, you warm the water, then the poor frog gets boiled. And by the time it wants to jump out, by the time major banks in China realize that WeChat Pay and Alipay are serious challengers, there is is no muscle to jump out. Instead of 15 minutes, a cycle of major incumbent industry disruption is 15 years. Otherwise, everything is perfect in this analogy. Now, here is something very important. I am a big believer in account-to-account payments. I am a big believer in ISO 20022. You know that ISO 20022 is a very important new standard renewing current SWIFT MT messaging. Few people know that current logic and current format of SWIFT messages has been implemented in 1975 when computers were very different. Therefore, the objective was to produce very short, very data poor messages. And nowadays, we want to produce very data rich payments messages with pictures, with geolocations, with all sorts of merchant and client and payment instrument information attached. Therefore, I'm a big believer in account-to-account payments. I'm a big believer of ISO 20022, specifically SWIFT MX messages taking over SWIFT empty messages. And I am a big believer of blockchain-based interbank messaging, clearing, and settlement coming up as well. And I see Visa, MasterCard, MX Diners, and China Union Pay being boiled like a frog in front of our eyes. And this is, in fact, something dramatic.
You're right. You're right. We have another question here from Ricardo Galvão. Obrigado, Ricardo, pela pergunta. And the question is, how can banks bring their employers on board for fintech partnerships, boards included?
Very good question.
Yeah.
The answer here is a very strange but very smart expression. Co-petition. Co-petition is the parallel management of competition and cooperation. We can compete constructively and we can cooperate honestly at the same time with the same entities. This is a more sophisticated, this is a more seasoned, this is a more gentle, this is a more advanced exercise in the world of management, compared to the traditional paradigm, which is cutthroat competition. Banks and bankers are typically very good to compete. That's what we did in the past 50 years, and we love to win. That's why I am on the board of several awards programs for banks internationally. That's why incumbent banks in an oligopolistic market, often, at least the major banks in an economy, are competing with each other. And that's why Jamie Dimon, the CEO of JP Morgan, says that fintechs want to eat our dinner and we are stronger, so we will stop them. Well, co-petition is a little bit different. Co-petition is that we will create a better and tastier and richer and more creative dinner together. We will share it beautifully, but next day we will create our separate dinners and we will compete. Next day we can cooperate again. This is a complex exercise in management. We have to learn co-petition, managing competition and cooperation at the same time. Now, I have good news. Shareholders, boards, executive management, mid-management, employees, all ranks within traditional banks are now waking up and they are recognizing that there is a call to additional innovation. And I think, honestly, that banks in general, especially the ones which are waking up seriously, are in a better position to survive or even benefit from this period of disruption than card companies. Banks are necessary. Cards, plastic cards, a separate, redundant, and outdated IT system costing a lot of outdated interchange fee is not necessary in modern payments.
Thank you, David. Obrigado, Ricardo. One last question.
Yes.
The question is, how will the introduction of CBDCs impact banks when keeping money with banks will become optional? In the end of the day, the question is, as we look to the Euro Digital and for Europe, the European Union is saying that, and mostly ECB is saying that, okay, we should have the bank channels as a way to circulate and to do the KYC and onboard the customers. There are other geographies, lesser geographies, which are saying, no, the central banks, we should have the customers should have their wallet in the central bank. And there are others like Singapore, for example, which are saying we are using CBDCs for wholesale banking, and that's all. And the question is, are we going to have our wallets on a central bank, or are we having the same distribution channel? And how this will mix up or relate it with the crisis moments when it's necessary to do some helicopter money in the hands of the people?
Right. Now, central bank digital currencies are being very intensively researched by major central banks for a good reason, because the right answer is less than obvious here. I can sort of feel, I can sort of vaguely describe what will happen. I am quite convinced that the final form will first focus on local circulation central bank digital currencies. This is a very important distinction we have to make, as opposed to local and international circulation, which the People's Bank of China, PBOC, the Central Bank of China, is trying to do. I have all my respect to them, and they have infinite resources. However, they will fail to create this dual circulation. What will go ahead is the local circulation, and in the local circulation, it will be very important that, yes, we will hold mobile wallets at central banks, but the maximum balance will be limited. In fact, the maximum balance will be limited by physical cash owned by us, being basically paid in through agents, bank branches, and central banks themselves, being sort of one-to-one exchanged to e-corona, digital British pound, whatever. So the fiat currency, the national currency. And I think that basically this will not even affect banking very much, because only the physical cash in circulation will go through this exchange process. The rest of the monetary aggregates will remain as they are, i.e. digital, because they are already digital. Now, cash as an emergency backup, as a doomsday backup, will probably be there, and every country will have to do exercises like what happens if we have to introduce cash again. There will be protocols, like there were protocols for the case Queen Elizabeth dies, and these protocols worked very well. And actually, this reintroduction of cash type of emergency logistics will be there in the background, and M0 as per cash will be safely stored in the basement of central banks. I am simplifying a little bit. And hopefully, there will not be a cybersecurity cataclysm triggering this emergency scenario. Anyway, central banks will be extremely careful not to hurt normal banks, not to hurt commercial banks, retail banks in this process, because actually it is in the mandate of central banks as well as supervisors and regulators to enhance, strengthen, and provide financial stability. Therefore, no form of CBDCs, no form of central bank digital currencies will even come to the selection of options which would hurt financial stability. By the way, this is going to be a beautiful exercise, the transition to cashless society. And by the way, this will transform the role of bank branches. Cashless branches will become very important concept. And 7 years ago, I wrote an article about multi-brand bank branch. And you know, I got terrible criticism. This will never happen. Currently, it's happening in the UK because of cost pressure. Anyway, it's an endless story. We can talk longer and longer and longer. By the way, if there is one more additional question, I will promise to answer very quickly. Whatever the question is, I will be very quick, but I want to take one extra.
Okay, thank you. Thank you, David. We have one extra, if you don't mind. And the question is, considering the current economic situation, how do you see investment in neobanks in the coming years?
Right. Very, very good question. And I promised to answer short. So now I am in trouble, because answering this question has to begin with a smooth differentiation in terminologies, because neobanks are often used for basically e-monies. But also, I like to use the term neobanks as a synonym of challenger banks, which is actually licensed digital-only banks. I will cheat, and I will answer this question for licensed digital-only banks. So now I will use the expression neobanks as a quasi-synonym of the expression of challenger banks. Why? Because it's more exciting to answer it this way. And the answer is this. There are approximately 1,000 licensed or licensing underway digital-only banks globally. Very few of them are profitable. Even the profitable ones are near break-even. Their profits are typically technical profits, not very hefty, large profits. However, I have not seen one anywhere in the world going near break-even or becoming profitable without a minimum investment of 1 billion British pounds. or 1 billion US dollars, 1 billion euros, a little bit more than 1 billion is needed. That's the minimum. In fact, Starling Bank, started up by Anne Boden in 2014 in the UK, reached a point of break-even marginal profitability after 7 years and £1 billion of investment. But the only reason why they reached this point is that they only focus on one market, the UK. They are not international like Revolut, like Wise and many other, Monzo and many others, only one market. And you know very well that 99% of their focus is on the simplest banking product, the plain vanilla, humble, radically simple current account. So with radical simplicity and full narrow market focus, after 7 years and £1 billion plus investment, they reached a point of near break-even. Therefore, the answer is this: as interest rates go up, the time value of money goes up. That's nominal interest rates. Investments, everything unchanged. Liquidity, everything unchanged. Shores up. Investors will ask, oh, my dear neobank, where is my money? Where is my profit? Because I, as an investor, can now put a term deposit into Bank of America or Standard Chartered or HSBC, and I get 3, 4, 5, 6, 7% nominal US dollar, euro, whatever denominated. So you, my dear neobank, where I put a couple of tens of millions or 100 millions, when are you going to give my money back? I'm simplifying. Or when are you going to at least produce some return on my money? Because otherwise I will pull the plug. I have a big yacht, I have helicopters, I have private jets. Everything is going up. The price of jet fuel, the price of fuel for my yacht. I need money. Where is my money? And very few of these neobanks will be able to come out. You don't have to be able to be profitable. This is very important. Jeff Bezos proved it with Amazon. You don't have to actually produce profit. It's enough to produce a credible business plan which shows that you could produce profit if you wanted in the short or mid-term. But this is a very seasoned exercise. A guy like Jeff Bezos can pull it off in a masterful way, but not every CEO of every e-money and neobank can pull off a Jeff Bezos level quick strategic business plan. So this is going to be a very interesting market. By the way, the first signs are already on the wall. What happened today? Today, Moniz, a UK player, has announced a strategic investment taking equity in Moniz on behalf of HSBC, the global banking group. And this investment is already because Moniz didn't have enough resources to produce economy of scale, nor did it have enough resources to finance its losses. By the way, the business model of these neobanks is U-shaped. Yeah. If you don't grow enough, your losses are very high. If you grow a lot, your losses are very high. And it's very hard to position yourself on this U shape. Anyway, I can go deeper and deeper and deeper, but let's leave these answers for the FinTech Innovation Program. And every day, very interesting things will happen in front of our eyes. And I am looking forward to this program to bring all of these things to you.
Thank you, David. Indeed, I'm sure that the incumbents have a shopping list ready for a lot of a lot of weeks behind, and they will start to their shopping around on neobanks. Thanks a lot, David, for the masterclass. It was marvelous. I believe that everybody was very excited with everything that we discussed today. And also, we are very excited to have you on our program. Obrigado a todos, obrigado pela vossa participação aqui, obrigado por terem chegado até este momento e poucas pessoas saíram e já passa da hora. Alguma questão, alguma dúvida que tenham, amanhã vão receber um e-mail nosso com a gravação desta masterclass. Vão receber também informação relativamente ao programa FinTech Innovation da nova FCT Executive Education e esperamos alguns de vós ver-vos na sala da reitoria da nova para poder participar neste módulo. Estamos muito excitados com isso. Obrigado a todos, tenham um resto de uma boa noite, um bom jantar, pelo menos, que já está quase na hora, e espero ver-vos em breve. E não se esqueçam, quinta-feira há outra Masterclass com o Anis, que está aqui connosco, e será uma excelente Masterclass também. Obrigado a todos.
Obrigado, Ricardo.
Thank you very much. It's great. I want to talk more to you about it, so come to the program.